Hello and welcome back. Merle Dembath here, your Conch Economist, and today's Conch report is on gold. Gold has been attracting a lot of attention recently for a number of reasons. Of course, inflation always sparks an increase in this, but the central banks around the world have been buying gold, somewhat in anticipation, I guess, of declining values of paper money. And I have bought gold myself down through the years. Originally, I bought it as part of a coin collection, and my earlier investments in gold were in the form of collectible coins that were put together for collection purposes. And fortunately, I started doing that when gold was still valued in the hundreds and not the thousands as it is today. But more recently, I have bought gold for insurance. When you get to be my age, insurance is not always easy to come by, and it doesn't care how old you are. It doesn't care what your medical condition is. It doesn't care what your lifestyle is or what your bad habits are. It doesn't care if you live dangerously and do skydiving. Gold is just there. It's eternal gold. It lasts forever, and it's always there when you want it. It always has face value. And so in more recent years, I have been buying gold for insurance. It has a nice face value to it, and it goes up over a period of time. I don't have to worry about being canceled and or being not renewed. And if you are looking for an alternative to insurance, you might consider something like that because gold lasts forever. It doesn't wear out. It doesn't expire. It doesn't do a lot of these things that some other forms of insurance might do. And what's interesting is that in more recent years here, in the last 3 or 4 years, I have bought gold 1 ounce bars from Costco. And I found that Costco was very competitive in terms of its prices. And on the screen here, you can see some of the bars that I have bought. I've bought several of them. Fortunately, I bought them before gold hit over $3,000. I'll state right now, I have not bought actual physical gold since the price has gone above $3,000. I'm not saying that I won't. It's just that gold is flexible. It does go down as well as up. The long-term trend is up, as I will show you later in the program today. But on a day-to-day basis or a week-to-week basis, there can be dips in this like any other commodity. Just like oil can go up and down, silver can go up and down, lumber prices can go up and down, so can gold. And so you need to keep this in mind. In fact, before you make any investment, you should consult with your financial advisor who knows you and knows what your situation is, and make sure that you've got the information you need to make an intelligent decision. But it was interesting to buy the gold from Costco because I could put it on a credit card. Of course, I paid the credit card off right away before I got hit with the 20% fee. But I got the points, and my wife does wonderful things with points, and we do a lot of traveling, and she uses the points to good advantage there. Plus, at the end of the year with Costco, you get a 2% rebate, so we got 2% of the purchase price of the gold back. And interestingly enough, the gold that I have purchased has held up well, and it's worth considerably more, at least on paper, it's worth considerably more than what I had originally paid it for. Now, in addition to buying physical gold, there are some financial instruments that can give you much of the same benefit as buying physical gold. And one of these is a exchange traded fund called GLD, which is kind of an abbreviation for gold, but it's traded on the stock exchange. You can buy it in your brokerage account, GLD. The recent price was $345. It tracks the price of gold. Like gold itself, it does not yield anything. There's no dividend here. You merely buy this because you want gold as part of your portfolio and part of an overall balanced investment approach, and to get the long-term benefit. As I indicated, it can fluctuate week by week or month by month, but over the long haul, it heads up. There are other ways to approach this. You can buy the gold miners. Now, gold miners tend to be a lot more volatile. Um, and I've just put a couple here just to give you something to talk to your financial advisor about. But one of them is Ring, and another one is GDX. They're both traded on the exchanges. What these do, they buy gold mine companies, and they pay a little bit of a dividend. The Ring pays about 0.75%, GDX about a half a point. So again, you're not buying these for dividends, but if you do want some type of dividend, they're less expensive than buying the GLD, but they are more volatile. Or you can buy gold miners themselves, and there's a lot of gold mining companies. I've listed two of them here, Newmont Mining, NEM, and the AEM. Newmont is $83 currently. Again, this fluctuates. It pays about a 1.2% dividend, or AEM about a 1%. Again, you're not buying any of these for a dividend play. There's much better dividend plays if that's what you're investing. But if you want to be part of the gold experience, if you want to participate in the appreciation of gold over time, then these are some possibilities. Consult with your financial advisor. There's many other ways to do this besides what I've suggested here. I'm just listing these to give you some idea of a starting point. This is certainly no exhaustive list by any means. Now, as I suggested, I have bought gold for insurance. Now, believe me, I carry other forms of insurance because very often you're required. For example, you have to have car insurance if you're going to drive on the public roads, because in order to have a driver's license, you've got to carry insurance. And so, of course, but there's always deductibles, and there's always times when you don't want to make a claim anyway. And it's good to have some other form of reserve that you can use to provide cash in those moments when you need that. And the nice thing about gold is that if you make a claim, there's no cancellation, there's no prohibition now. Well, you've made a claim, you can't buy gold anymore. No, if you cash one of your gold bars in, or one of your gold coins in to meet an expense because you had an auto accident, or because there was storm damage to your house, well, don't worry. Claim experience is no negative when it comes to buying gold. Gold doesn't care how many times you bought and sold it. It doesn't care why you bought and sold it. It gives you unconditional love. It's there when you need it, and it's always glad to see you again. And so there's a case to be made for having some alternative form of insurance, which is what I consider it. In a homeowner's policy, your mortgage company is going to require you to have a traditional type of insurance. Well, yes, of course, but again, there's deductibles there, and you don't want to make a claim if you don't have to. So if you need to use the gold to step in and provide the cash to make the repair so that you don't have to make a claim, or it will cover the deductible, it serves its purpose. So there are some ways that I have found that make sense for me to own gold, and I've been impressed over the period of time of what happens to the value of gold in comparison to other things. And I'll share this with you right now. I've shown these numbers before, but I'll present them today in a form that is suitable for what we're doing right here. Well, to give us a historical perspective on the value of gold, I've prepared a chart here showing the last basically 25 years of the consumer price index, the S&P 500, which kind of tracks the stock market, and then gold on a per ounce basis. I'll point out that the figures there for 2025 obviously aren't for the end of the year. The CPI date is actually for August, which is the most recent available. And the S&P 500 and gold prices are as of the date that I'm recording this, which is on the 25th of September. So keep that in mind. These are not end of years, but they're close enough for our purposes. And essentially speaking, over this 25-year period, consumer price index rose 86%. And if you've been a follower of my programs, you know that I believe that that is on the low side. I believe that inflation has been much higher than that over a period of time. But anyway, that's what the official data show. The S&P, of course, is a hard number because this is recorded on a daily basis and is an actual count. And that's gone up nearly 400%, 398. but gold far and away over 1,200% over this period of time. So there's no doubt about it that yes, it can fluctuate. Yes, it sometimes goes down, but over a long period of time, if you're wanting something that'll protect you from the declining value of the dollar, gold is hard to beat. And it's something I would suggest you consider, again, talking with your financial advisor. Well, that pretty well wraps it up for today. If you like this type of program where we get into some specifics like this on maybe how to invest your money, please let me know because we're trying to help you be your own economist and utilize data that's available and help you make better decisions for your own life. So that's all for now, and see you next time. Thanks for tuning in.